Welcome back to the Pro Ticker Podcast, everybody. Your Wednesday morning edition covering, major financial magazine headlines. Today, we're diving deep into some of those market movers. And boy, oh boy, is there a lot to unpack. We got President Trump back in the White House. The NASDAQ is on a tear, and AI is the word on everyone's lips. So we'll be looking at top-tier sources like the Wall Street Journal Market Watch and Bloomberg to get the full picture.
Yeah, it is a wild time to be following the markets, that's for sure. You'd think Trump's return would have thrown everything into a tailspin, but it's been a bit more nuanced than that.
That's what I found fascinating, too. The Wall Street Journal, Bloomberg Market Watch all seem to agree that there's this cautious optimism, kind of a wait-and-see approach. But the Wall Street Journal is saying that the dollar is weakening, which is usually good for gold. And Bloomberg reports the yen is outperforming other currencies. I mean, isn't that a little unexpected given Trump's past stance on trade?
Yeah, it might seem counterintuitive at first glance, but
Yeah.
you have to remember, currency markets are complex. They react to a multitude of factors. It's possible investors are seeing the yen as a safe haven amidst the uncertainty. It's also worth noting that while the Wall Street Journal says the dollar is weakening, they're also reporting that tech stocks are actually rallying, possibly fueled by that massive new AI initiative from the administration.
Oh, you mean the Stargate project? Market Watch called it a potential game changer. $100 billion. Maybe even $500 billion initiative. OpenAI, Oracle, SoftBank, and who knows who else are all jumping on board. Data centers, potentially over 100,000 new jobs, all aiming to make the U.S. the leader in AI.
Exactly. And MarketWatch points to SoftBank's stock performance in Tokyo. It's soaring, which suggests Asian investors are incredibly enthusiastic about this initiative and its potential impact on the global AI landscape. This could be a major driver of growth, not just for the U.S., but globally.
Okay, so we've got Trump back, AI is heating up, but let's not forget the NASDAQ 100. Bloomberg reports it's practically doubled since the beginning of 2023. That's a $14 trillion increase in value. Mind-boggling, right?
Remarkable indeed. Bloomberg quotes Rich Ross from Evercore ISI. He remains incredibly bullish on tech despite rising bond yields, which usually spooks investors. He cites tech's dominant position and strong technical signals, like the Nasdaq's 467-day streak above its 200-day moving average.
Hold on, can we break that down for a second? What does that 200-day moving average actually tell us?
Sure, it's a technical indicator that many traders use. Essentially, it's the average closing price of the Nasdaq over the past 200 days, when the current price stays consistently above that average for a long period. Like the 467 days Bloomberg mentioned, it can be seen as a sign of strong upward momentum.
Okay. So Ross is basically saying that even though some things might point to a slowdown, the underlying strength of tech is keeping this rally going. But Bloomberg does bring up a big question mark. Big tech earnings are due next week. Can they meet these insanely high expectations?
That is the billion-dollar question. It'll be fascinating to see how the market reacts if those earnings disappoint. John Kolovos of Macro Risk Advisors, also quoted in Bloomberg, suggests keeping an eye on the NASDAQ 100 ETF, or QQQQ, and its key support levels. If it starts dipping below those levels, it could be an early warning sign of a potential shift in sentiment.
Okay, so AI is potentially driving growth. The NASDAQ is holding strong for now. But let's sprinkle in some fun, shall we? We can't ignore the Trump and Melania meme coins. I mean, come on, it's too good to pass up. The Wall Street Journal did a deep dive into this phenomenon, and it's both hilarious and a bit unnerving.
It really highlights the speculative nature of the crypto market, doesn't it? The Wall Street Journal reports that the Trump token is supposedly worth $35 billion, at least on paper. But as they rightly emphasize, those are unrealized gains and incredibly susceptible to manipulation. We all remember what happened with the pump and dump schemes of 2021.
Right. It's a wild west out there. And the Wall Street Journal made a great point. Without a solid business model or real-world utility, most meme coins are destined to lose their sparkle and disappear into the crypto graveyard.
It all comes down to due diligence. Whether you're looking at AI tech stocks or even meme coins, you need to understand what you're investing in. What are the fundamentals? What are the risks?
Couldn't agree more. Okay, let's pivot to something a bit more grounded. Market Watch is reporting that Adidas had a phenomenal quarter, smashing expectations and showing what JP Morgan analysts are calling brand heat. They're projecting double-digit growth for this year, which is pretty impressive in this economic climate.
That's a really interesting point. Could Adidas be a stock worth watching for our listeners? Their performance definitely suggests they're doing something right. And navigating these uncertain waters effectively?
Something to think about for sure. And to round out our global perspective, let's look at what's happening with central banks. Bloomberg reports that Japan's central bank, the BOJ, is leaning towards raising interest rates, seemingly moving towards normalization despite Trump's return and the potential for market volatility.
It's a bold move, but they've been struggling with deflation for years. This might be their attempt to finally get things moving in the right direction. Meanwhile, the Wall Street Journal reports that Malaysia's central bank is holding steady on rates, content with their current position despite some inflationary pressures.
So we're seeing two very different approaches to managing economic challenges. The BOJ seems to be prioritizing a return to normalcy, while Malaysia is taking a more cautious wait-and-see approach. It makes you wonder how these different strategies will play out in the long run, and how they might impact global interest rates, and ultimately our own investments.
Absolutely. It's a complex web of interconnected factors, and it's going to be fascinating to see how it all unfolds. But we'll be here to break it down for you every step of the way. It's interesting to see how Japan and Malaysia are navigating those choppy economic waters, especially considering the added uncertainty of, Trump's return to the White House.
Yeah, that's a great segue, actually. I wanted to circle back to Trump's economic policies for a moment. The Wall Street Journal is reporting that he's already pushing for an early renegotiation of the U.S. trade deal with Mexico and Canada.
Well, that didn't take long. And you combine that with his comments on potential tariffs on Chinese goods that Bloomberg was reporting on. It's no wonder the markets are experiencing a bit of a roller coaster ride right now.
Yeah, the Wall Street Journal even used the phrase currency roller coaster to describe the market reaction to all this tariff uncertainty.
And it's not just currencies. The Wall Street Journal also notes that Germany, a major exporting nation, is seeing a dip in economic sentiment. Businesses there are bracing for the potential impact of those U.S. tariffs.
Yeah, and the Wall Street Journal article mentioned something called the ZEW indicator of economic sentiment in Germany, which dropped significantly. I guess that shows how worried people are about Trump's unpredictable trade moves.
It really underscores how interconnected the global economy is. Actions taken in one country can have far-reaching consequences. And right now, a lot of businesses and investors are holding their breath, trying to figure out what Trump's next move will be.
Yeah, it's like trying to predict the weather, except the weather is made of tariffs and trade deals.
Exactly. But amidst all this uncertainty, there are some interesting developments taking shape. MarketWatch reports that Mark Andreessen, a prominent tech investor, is actually rallying Silicon Valley around some of Trump's stances, particularly on issues like crypto AI and taxes.
Oh, wow. That's surprising. Considering how much the tech industry clashed with the Trump administration in the past, maybe they're realizing that collaboration might be more effective than confrontation.
Perhaps. And it's interesting to see that collaboration reflected in the Stargate project we discussed earlier. The fact that giants like OpenAI and Oracle are partnering with the Trump administration on such a massive AI initiative suggests a recognition on both sides that AI is a crucial area for growth and innovation.
Yeah, it's like they've put aside their differences to focus on this common goal, which is pretty remarkable considering the current political climate.
It'll be fascinating to see how this relationship between the tech industry and the Trump administration evolves, and if this collaborative spirit extends to other areas of tech policy.
Now, shifting gears again, we have to talk about this meme coin frenzy. I mean, it's everywhere. The Wall Street Journal reports that Trump's meme coin, Trumpo, has already reached a market cap of $9 billion, while Melania is at around $810 million. It's just wild.
It really raises the question, is this just harmless fun or a potential conflict of interest? The Wall Street Journal points out that critics are concerned about the blurring of lines between Trump's political and business interests.
Yeah, I mean, having a sitting president potentially profiting from meme coins, even if it's indirect, is pretty unprecedented. It's no wonder people are raising concerns about potential influence peddling.
The Wall Street Journal does a good job of breaking down the mechanics of meme coins, explaining how they're created, traded, and of course how susceptible they are to those pump and dump schemes. It's a volatile market, and while some might see it as a quick way to get rich, it's a risky game to play.
Yeah, the Wall Street Journal even asked the question, could Trump actually pocket those billions his meme coin is supposedly worth?
And their answer, which I think is important for our listeners to understand, is likely no. The Wall Street Journal clarifies that these are unrealized gains, meaning that if Trump actually tried to cash out, the price of the coin would likely plummet, wiping out those paper profits.
It's a good reminder that the value of meme coins, like many cryptocurrencies, is often driven by hype and speculation, rather than solid fundamentals. The market is incredibly susceptible to manipulation.
This whole meme coin saga is a fascinating case study. and how politics, technology, and finance are all converging. It'll be interesting to see how it unfolds, and if it leads to any regulatory changes or sparks more ethical debates.
It definitely highlights the need to constantly reevaluate our understanding of risk value and what we consider a legitimate investment in this rapidly changing world.
Speaking of investments, while tech stocks are grabbing headlines, it's worth noting that other sectors are also showing signs of life. Remember Adidas? MarketWatch reported that they had a fantastic quarter, beating expectations and demonstrating what analysts are calling brand heat. Their stock is rallying, and they're projecting double-digit growth for this year.
That's encouraging news for the consumer discretionary sector. It suggests that even with all the economic uncertainties, consumer demand is still holding strong.
Adidas' success also demonstrates the power of brand strength and innovation. In a competitive market, they've managed to weather the storms of the past few years and come out stronger on the other side.
It's a good reminder that there are always opportunities to be found, even in challenging times. And let's not forget the broader market context. Bloomberg reports that despite Trump's return and the initial market jitters, both the NASDAQ and the S&P 500 are approaching new all-time highs.
It seems like the underlying strength of the U.S. economy, combined with the continued growth of the tech sector, is overriding some of that political uncertainty, at least for now.
Yeah, the question is, will this bullish momentum continue, especially as we head into big tech earnings season? Those reports are going to be a crucial test of whether the market's optimism is justified.
It'll be fascinating to watch how things play out. We'll have to wait and see if those earnings reports can live up to the hype, or if we're headed for a correction.
Okay, we've covered a lot of ground in this section. Maybe we should take a quick pause and then come back to wrap things up.
Sounds like a plan. Let's take a moment to digest all this information, and we'll be back shortly to finalize our deep dive into today's financial news.
Okay, we're back, ready to wrap up our deep dive into today's financial news. Before we go, I wanted to touch on something we mentioned earlier, the contrasting approaches of global central banks. It feels like a bit of a tug-of-war out there.
Yeah, you're right. Bloomberg's report on Japan's central bank leaning towards raising interest rates, while Malaysia's central bank, according to the Wall Street Journal, is holding steady, really highlights those unique challenges that each country is facing.
So Japan, with its long history of deflation, seems eager to normalize interest rates and kickstart economic growth.
It does appear that way. Meanwhile, Malaysia, with its concerns about inflation and the uncertainties of global trade, they're taking a more cautious wait-and-see approach.
Yeah, it's fascinating to see how these divergent policies will play out on the global stage. It makes you realize that the global economy isn't a one-size-fits-all system. Each country has its own unique circumstances and priorities.
Exactly, and it's important to remember that those decisions can have ripple effects across the globe, impacting everything from currency exchange rates to investment flows. It's a complex web of interconnectedness.
So for our listeners who are trying to make sense of it all, and maybe make some informed investment decisions, what's the key takeaway here?
I think the key takeaway is the importance of staying informed. Keep an eye on these global economic trends. Understand the forces at play, and don't be afraid to diversify your portfolio.
Great advice. Okay, we've covered a lot of ground today. From Trump's return and the market's reaction to the AI revolution, the meme coin craze, and the contrasting strategies of global central banks, it's been quite a ride.
It certainly has. We've seen both opportunities and challenges emerge, and it's clear that the financial landscape is constantly evolving.
As we wrap up this deep dive, let's leave our listeners with a final thought-provoking question. Remember the Stargate project and all that talk about AI being a game changer. Will it live up to the hype, or will the bubble burst?
That is the million-dollar question, isn't it? The Stargate project, with its massive investment and ambitious goals, it's a bold bet on the future of AI. Only time will tell if it delivers on its promises and truly transforms industries, as many predict.
And that's where our listeners come in. We encourage you to continue exploring these topics, do your own research, and make your own informed decisions. Knowledge is power, especially in the world of finance.
Well said. It's been a pleasure diving deep into these topics with you today.
Thanks for joining us for this Wednesday morning deep dive into the world of finance. We'll see you all tomorrow morning with new headlines from major financial magazines.